It's Accountech Bytes, your rapid reconciliation of the week's news in accounting technology with me, Tom Herbert. Thank you very much for tuning in. If you do find this useful, please remember to like, subscribe, or follow, depending on your platform of choice. Let's get into the news then. And Futurism reports that Microsoft attempts to ram its AI agents down unsuspecting users' gullets is turning into a bit of a disaster. So this comes as researchers at Carnegie Mellon found that even the best performing agents failed to complete real-world office tasks 70% of the time, while publication The Information reports that Microsoft salespeople are struggling to meet ambitious growth targets, cutting quotas by up to half earlier this year. A claim which Microsoft disputes, but stories like this add up, and it's another indication that companies are struggling to convert the hype around AI into actual revenue. If, like me, you hang around tech forums, you can't help but notice users' fairly blunt response to Microsoft's attempts to insert Copilot for Work into its Edge browser and Windows 11 system. So, responding to a social post from Microsoft that says, "We heard you wanted Copilot mode at work," one user said, "You heard wrong." While another user says, "I find your detachment from reality disturbing. Is this Clippy all over again?" Back to Futurism again and ignoring the advert for old men's shoes. It points to a number of studies that say the number of people using AI at work is falling. So The Economist crunches numbers from a Census Bureau survey that says the percentage of Americans using AI to produce goods and services at large companies rang in at 11% in October, down from 12% in the prior study. What's 1% between friends? While another economist at Stanford, who tracks the use of Gen AI at work, found a drop in usage month on month from June to September. However, OpenAI, parent company for ChatGPT, boasted that its enterprise customers were saving an average of an hour a day by using the product. They would say that, wouldn't they? Moving on, and Xero made sure that my LinkedIn feed was pretty much unusable for about a week by announcing changes to the way it charges developers for using its APIs. So, as I'm sure you know, APIs are the pipes down which the data from Xero sluices back and forth to connected partners. Previously, software that connected with Xero through its Xero App Store was charged 15% of average revenue per customer, although several developers told me they could generally get around that. But this model is being retired and replaced with a tiered structure where you appear to be charged a monthly fee and go up the tiers depending on how much data you use. Although it is worth noting that if you want access to journals, you have to be on the advanced tier. Accounts Daily down in Australia calls it an abrupt end to the all-you-can-eat zero data buffet, calling it a shock announcement that leaves accountants reeling. So the changes, which will take effect from the 2nd of March 2026, mean no more free API access, and RSM's Laurel Miller said that developers could incur significant costs. Friend of the show, Heather Smith, points out that the old pricing model was rather clunky, but under the new model, it was likely that costs would be passed on to users of integrated software and could represent a barrier to entry that may stifle innovation. Patrick Cunningham points out that one platform, RecHound, will get an annual bill of $17,000 for using the Xero API, while Nikolai Thompson, co-founder of AI bookkeeping app Genesis, dug into the announcement and found a couple of other points: that there's a ban on bots impersonating users, logging into browsers to use the software rather than a direct use of the API. I can think of a couple of examples. And there's also a ban on using data for training AI models. There's quite an interesting debate over who actually owns the data. Does it belong to the client, the firm, or to Xero? With this move, it seems to me that Xero is saying them. Let's move on to HMRC, and our very own Molly McFarlane digs into the budget for news that the revenue is swapping brown envelopes for digital notifications. So, as part of a policy paper released with the budget, anyone who engages digitally with HMRC will receive correspondence through their digital tax account unless they actively opt out. Accounting Web readers have plenty of thoughts on this. Here's one from me. And to counter a lack of experience in business technology from graduates joining the accounting workforce, membership body ICAW has launched a new technology hub for ACA students designed to give trainees hands-on experience with industry standard tools like Sage, Xero, and Dex. Some strong numbers from Sage's annual report published last week, and a 10% growth in revenue, 17% growth in underlying operating profit. But perhaps the most startling number is that 45% of that revenue comes from North America alone, with half of that North America number coming just from its Sage Intacct product. Now, here's what you've all been waiting for. It's the Excel World Championship. And congratulations to Dermot Earley, who won the Microsoft Excel World Championships 2025 in Las Vegas. Dermot won the belt, trophy, and $5,000 prize money by beating 23 other players in the final, where competitors had to solve an origami-inspired final case and complete 130 questions spread across 7 levels. Excellent stuff. And here is your weekly plug for the Finance, Accounting and Bookkeeping Show, 11th and 12th of March at the NEC in Birmingham. So bookkeeper Natasha Everard presents a session on the Frankenstack, so a setup of bloated, disconnected apps. So Natasha will talk through how to spot a Frankenstack, how to apply a 5-step detox, and then rebuild a leaner, more connected toolkit. You can sign up to watch this and find out more about the show at fab.uk. While I'm in a plugging mood, myself, Richard Hattersley, and Intuit's Nick Williams will present a session based on the data pulled from the entries for the Accounting Excellence Awards this year, looking at trends in the profession and the strategies driving our finalists. It's at 2 o'clock on Monday, December the 15th. You can sign up or find out more information by clicking a link in the description. Let's get on to some new stuff now, and we have a deluge of Dext updates. So you can now add a short workflow note to each supplier in supplier rules. There's new integration with practice management tool Carbon. Prepayments are now available for accounts integrated with QuickBooks Online. They've added an update that makes setting up new accounts faster and more consistent. And the long-awaited Dext payments for UK supplier invoices is now in testing. Here's an update from Iris Senior Product Manager Nick Lloyd, who flags 3 improvements to Iris Elements accounts production. So Charity Accounts is available in the Enterprise Edition. There's an IXBRL editor in the Professional and Enterprise Edition. And finally, for the Enterprise Edition, it's now possible to produce compliant accounts using everyone's favourite accounting standard, FRS 101. Lots of QuickBooks updates as well. We know all about the platform. But coming soon is the Intuit Accountant Suite. So designed to replace QuickBooks Online Accountant, this offers accounting and bookkeeping firms a new dashboard, consolidated client management, role-based access controls, the ability to close the books at scale, and client insights. A new QuickBooks Payments feature allows users to add a Pay Now button on their QuickBooks invoices. So you can now accept payments directly from your customers' bank accounts with Pay by Bank, or let them use their credit cards with the Pay by Card feature. Fees apply. There's a new MTD for income tax experience. This provides a simplified view of obligations, real-time income tax data, and the ability to file multiple income sources simultaneously. Here's something new from Xero, and off the back of its acquisition of Sift Analytics last year, the Kiwi Cloud Pusher has now announced that its new analytics features are now globally available. So for Xero users on those higher tiers, You can now see dashboards, visualizations, a cash flow manager, get insights, and view business health scorecards. A quick update from Float.
They float.
Ooh, and you can now answer what if questions in 2 clicks. Here's what it looks like. Very nice. AI bookkeeping tool Briefcase has announced that it's just embedded all 102 HMRC VAT notices from gov.uk. According to founder Ruben Steenkamp, this makes its VAT automation more accurate, consistent, and easier to audit. Swiss encrypted platform Proton has announced the launch of Proton Sheets, so a privacy-first alternative to Excel and Google Sheets. I've been a Proton user for several years and haven't looked back, so I'm looking forward to playing with this. It was my turn on the opinion column last week, and I decided to explore why a wave of accounting technology founders are returning for a second or even a third bite at the cherry, spotting gaps left by consolidation, stalled innovation, and a drive to build again. Do check that out. And one of those mentioned in the column was Silverfin co-founder Joris van der Koot, who is back with a new venture, Ravical, focusing on AI agents. He spoke to me as part of the No Accounting for Tech podcast, which you can find by searching for Accounting Web wherever you get your pods. And that's your lot for today. Thank you very much for watching. If you'd be kind enough to like, subscribe, or follow, I'd be eternally grateful. And while you're at it, why not sign up for my accounting technology email? Pop your email address in the box, hit the yellow button, and it'll be with you every Thursday morning. I'll be back next week with another video. Until then, bye for now.